Welcome to TradeTheMBI.com. This is John. This report is for the 31st, and well, no surprise here. We were expecting a continuation to the downside. Very easy from that 76 underneath percent Morganacci line right here. Expected lower. Then you had the green, which for the ABM, that an extra bonus spot. It was pretty easy to see from a 5K standpoint, or even from a 50K when things started turning. And then there were some brief buybacks. Again, you're not going to get one direction, especially with all the option trading that's taking place these days. They've got to move things back and forth, but we can see it continuing back to the soft side. Again, we still continue to have MBI white lead, but all this signal once we had the dip of the blue here below our gray, and then it was just a matter of waiting for magenta to cross below, and that led to the first beginning. Things popped up a little bit from that while we had a bit of a short increase. Then once the crossover of MBI white was pretty clean, and it was easy to see that. And we had a higher level of the ABM yellow, which made a nice transition point between that 176, which makes it easy to follow that to the downside. And we saw that the NASDAQ was the one keeping things going, but it was also starting to decay on a regular basis, and finalized that crossover the other day with that cross back up here, and then it continued to bleed through. And given what we're seeing there, unlikely that the 76 will hold in this particular case. We didn't have positive extremes on the NASDAQ from this, but what we had was the yellow, which is right on the very edge of it. They don't always fill, but more often than not. And you can see that we saw the varying situation from the economy, significant slowdown in a lot of different areas, but at the same time, not quite enough to be catastrophic. From a rate yield situation. Again, improvement, but going back the other direction. And that, again, is the conundrum, because rates are nowhere near where real inflation is, and it doesn't match. And you can see that with the poor results from the Treasury yield. It'll be interesting now that we have the Trump verdict and that through, whether that will have any impact on the market. Unlikely. No one really thinks that's going to make too big a difference. From an oil standpoint, the softening there really is the key in helping ease things off from an inflation standpoint. Not low enough to make a huge dent at this particular stage. You'd have to get down into that lower portion that we had back in December, below 70, to really be of any deflationary assistance. It would help, because at that point, then you might see the Fed be able to do something or react. But at this particular stage, they're kind of unable to do a thing. And it'll be interesting because as we move towards the summer, if things can start to accelerate, the problem you get with that when you see the slowing, you don't know how far it's going to accelerate. And if things tip, that's all it takes. And then you get a very sudden and dramatic decline in performance, which counterintuitively may be positive for the market in some aspects, because they'll expect the Fed to ease even further. That's the whole goal of the market at this particular stage. Just give us cheap money, and we'll keep doing what we've been doing, which is just escalating prices. From a gold standpoint, that would be definitely a push to the upside, because that would indicate that deficits in that are going to continue unabated, and just creates all sorts of difficulties. Bitcoin's still caught in this middle zone of nothingness, just hovering along at this particular stage. And I think we start to see ETH doing the same thing. And it's just relative to the lack of any real movement. We expected volatility in market trades simply because of end of month, and that growing complacency allows for a lot of misalignment, where you can take advantage of different plays from those that are positioned incorrectly. And that's just kind of normal market behavior. But we can see, going back from the beginning of where this started to break down with the MBI white spikes, and MBI white staying in the lead throughout most of it. So every time it spiked above, that created a new short setup. began the morning with the significant white spike. And what I was talking about is when you see these spikes of the gray, particularly above 25 or even higher, and then you end up with your lower pivot, that's the signal that you're going to get continued decay. We saw a similar thing happening as we came across later in the morning, where we rolled over on the second one by midday, and that has led to the most recent fade back. We're seeing a little bit of strength coming back into it, but without a DOC orange dip below red. It's not going to go anywhere. It's just going to continue to move in the same direction, which is to the downside. So pretty clean, pretty straightforward. This sets us up for the beginning of June. So new indicators will be coming out for that over the weekend, and you'll be all set to continue to take advantage of this. So you can see in the intraday, we had the morning slight breakdown that gave put players too much advantage, so they flipped it the other direction. That generated some new call buyers, and they sold into those, going back and producing new lows on that right before the close. And here in the post market, not a whole lot of excitement. We're just pretty much flat to where it was before. So all good stuff, and I think the readings are pretty clean with it. So having no issues from that standpoint, all very effective. As always, though, anything relevant, I will put on the Skype chat, and have a good one. Trade well.